Hey everyone, we got some great news out of Snowflake in their latest quarterly earnings call. So in this video, I was going to go through those highlights and share them with you and also answer what it could mean for Snowflake stock investors. So let's get right into it. So in May, the company saw a return to growth with strength continuing into June and July. So it looks like the quarter got better as it went along. So that signals a good indication for the next quarter, although the company's forecast was not as strong as you would think if they're highlighting the momentum was increasing. Moving on, they said that new bookings are outperforming their expectations. And the way I like to think of or describe Snowflake is like a magazine company. They will sell you a magazine subscription for 12 months, and you go along with revenue as the months go on. So Snowflake cannot record that subscription over the 12 months as revenue whenever they sell it. They can only record that as revenue when they send you that magazine subscription, whether digitally or in the mail. So every month that goes on, they record revenue. That's what bookings. So when they sell that subscription, that's recorded as bookings for Snowflake. And in Snowflake's case, it's not a magazine subscription, it's data services. And so as their customers use and utilize those services, or as the time goes on in the contract, that then gets recorded as revenue. So when bookings are increasing, that's good news for revenue in the future. That means future periods revenue are looking like they are better than what Snowflake was expecting. Their Q2 remaining performance obligations grew 30% year over year, totaling 3.5 billion. So you could think of remaining performance obligations as the accumulation of all those subscriptions that they have sold and not yet delivered. So they have all of that contracts, sales, they have all that ready and waiting to be delivered. As their clients consume those services, they will then turn into revenue. Okay? And of that 3.5 billion in remaining performance obligations, 57% of that is going to be recognized as revenue in the next 12 months. In other words, 57% of this 3.5 billion will be consumed over the next 12 months. Okay? 57% of that 3.5 billion will be consumed over the next 12 months. And what investors should be looking for is how are these clients that are consuming that data service over the next 12 months, are they renewing their contracts? Or are they going to consume it over the next 12 months and say, okay, no thank you, Snowflake. We don't want any more of these services. It's worth more it's more of a hassle than it's a benefit to us as a company, right? To answer that question, investors can look at the next thing I'm going to talk about is Snowflake's net retention rate, which came in at 142%. The net retention rate of 142% means that if a customer spends $100 with Snowflake this year, the next year they spend $142. So they're increasing their spending with Snowflake, not decreasing. And that tells me that customers of Snowflake are getting good return on investment with the money they're spending with Snowflake. Otherwise, they wouldn't increase their spending with Snowflake if they weren't getting good value. They would say, no, it's not worth it. We're not getting the benefit we thought, so no thank you, we'll cancel at the end of this year. But the good news, the great news for Snowflake stock investors is that's not the case, is that customers are increasingly seeing a good return on investment for their spending with Snowflake. And the evidence is in the net revenue retention rate of 142%. Moving on, the company's got $4.9 billion in cash, equivalents, and short long term investments, and that's becoming increasingly valuable as interest rates continue going up. Multiply that $5 billion at 5%, which is what Snowflake can get with short term government bonds, and you'll see how much revenue or profit that can turn into. right? Easy, relatively easy profit just putting that money in short-term government bonds and watching that interest income generate. So that's that's a nice part of its business, that it can generate that strong profit cash from just interest income. And here they're going on talking about the forecast, which assumes their largest customers will continue to be a growth headwind, and they're seeing encouraging signs of stabilization, but not recovery. Not recovery. They're just seeing that decrease just kind of moderate and kind of stabilize, but it hasn't turned around and started to increase yet. For the third quarter, the company is expecting 670 to 675 million, representing year-over-year growth between 28 and 29%. Between 28 and 29% for the next quarter, which is below the rate of growth they experienced in the second quarter. So that was a bit disappointing to Snowflake stock investors, because first the company said that the strength is continuing, which led some to believe that, okay, momentum is accelerating, but then they give you the revenue forecast that shows continued deceleration in revenue growth. So interesting mismatch there between um, the optimism and the actual forecast. All right, but still, a lot of great news here from Snowflake's CFO, namely in the net revenue retention and the new bookings outperforming expectations. All right, but that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.